Howdy, folks. Welcome to Liberty Call. I am Raymond Dahlman, your humble host, and it is Thursday, April 11th, 2024. Hope you're having a good day out there. My boy Jake's moving around underneath me, so if you hear his collar jingling, don't be surprised. So if it is your first time watching Liberty Call, if you could do me a favor, if you give me some thumbs up, like, share, subscribe, follow, and press that notification bell. All righty, let's go ahead and get into today's numbers. It was a weird market. Things were back and forth. Dow Jones finished the day flat, down 0.01%, 2 points, closed at 38,459. The S&P 500 up 0.74%, closed at 51.99. NASDAQ up 1.68%, closed at 16,442. The VIX was, it doesn't show what it is for today. It's currently at 1491. Canada down 0.4, Brazil down 0.51, and Mexico up 0.34. Let's see, over in Europe, Germany was down 0.82%, the UK down 0.47%, France down 0.27%, Netherlands down 0.32%, Spain down 1.16%, Italy down 0.96%, Switzerland down 0.26%, and Portugal up 0.27%. Russian exchanges, both green today. MOEX barely up 0.02. The RTSI up 0.18. And the Asian markets, the Nikkei was down 0.3%. Australia down 0.44. New Zealand down 0.39. In China, the Shanghai was up 0.23%. The Shenzhen Component up 0.03%. China A50 down 0.16. DJ Shanghai up 0.23. Hang Seng down 0.26. And the Taiwan weighted was closed for today. All right. So like I said, the markets were just kind of all kafluky today. The Dow was way down. Then, it looks like we got some PPI data that helped boost stocks, and then it went right back up, and then it, closed right at the flat line. All right. Market recap, U.S. stocks rise as tech rebounds ahead of earnings from major Wall Street banks. The S&P 500 rose on Thursday, driven by tech companies as data showing cooling producer prices eased inflation jitters. The PPI rose by slightly less than expected in March, with a PPI increase of 0.2% last month after rising 0.6% in February. The data comes just a day after consumer inflation for March rose much more than expected, denting investor optimism for a Federal Reserve rate cut as soon as June. Markets are see only a 24% chance for a June cut, down from 61.1 last week. On the labor market front, the number of Americans filing new claims for unemployment benefits fell more than expected last week, suggesting that the labor market remained healthy. Constellation Brands earnings impressed, while CarMax stock slumped. God, reading today is terrible. 9%. After a lower than fourth quarter profit. The two quarterly reports come just days ahead of the earnings from Wall Street banks, such as including JP Morgan, Citigroup, and Wells Fargo, with BlackRock, the world's largest asset manager, also reporting at the end of the week. Goldman Sachs recommended clients buy call options on large cap banks over the next 3 months, with multiple catalysts, including an easing of investor concerns regarding Basel III endgame and more news on capital returns from Comprehensive Capital and Analysis Review. Big tech companies led the broader market higher, with Apple Inc. leading the way. That's a bold statement there by Goldman Sachs to recommend those purchases. All right, let's get that off the screen. Move up to the next one here. Stock surge as Goldgasms to record high after adjusted PPI sparks a buying frenzy. Let's see what this article had to say. The day's market movements began with stocks falling and yields rising following a significant CPI print. However, sentiment swiftly shifted after a hot PPI print, which Biden's BLS seemingly manipulated to appear as a miss. Despite the apparent gaslighting, algorithmic trading drove stocks higher, particularly in mega cap, tech, and momentum names amidst low volumes. Apple experienced the best day in almost a year with a 4% gain, while Nvidia surged over 3%. Gold also saw a renewed interest, reaching a fresh all-time high above $2,370 per ounce, indicating ongoing bullish sentiment despite potential retracement concerns. Overall, momentum names surged as investors sought to recapture earlier highs, while classical cyclical sectors like energy and banks lagged. Notable sector highlights included a consumer stock experiencing a sell initiation, semiconductors fluctuating amidst an AI event, and ALPN attracting attention due to a rumored acquisition. One potential catalyst for the day's market surge may have been to avoid a potential downward cascade triggered by CTA selling. Notably, short selling in macro products spiked, suggesting market vulnerability to further declines. Despite the market's bullish fervor, 10-year yields remained at a point of concern, rising high as 4.59% and continuing to trade in the red zone with a breakout potentially signaling further increases. As trading volumes tracked lower than the day's 20-day moving average, macro volumes increased for the second consecutive day. Hedge funds led sales, particularly in healthcare and consumer discretionary sectors, while buying was observed in information technology. Looking ahead, anticipation builds for the overall start of the earnings season, with big banks set to report Q1 results, potentially providing further direction for market movements. So, yeah, there appears to have, well, based upon the Zero Hedge article, that there was some chicanery involved with the PPI number to make it look better than it was. So I don't know. I just know things aren't that great. That's just kind of the way things are right now. All right, last article here. Biden's inflation narrative dies as price growth rises to a 7-month high. Well, that's not good either. The latest data from the Bureau of Labor Statistics reveals that CPI inflation in March reached a 7-month high, contradicting predictions of transitory inflation. Year over year, CPI inflation rose 3.5% in March, marking the 37th consecutive month of inflation surpassing the Fed's 2% target. Additionally, month-over-month inflation remained steady, with CPI increasing by 0.4% from February to March. Key contributors to the ongoing price increases include food, services, electricity, and shelter. Specific categories experienced significant year-over-year price inflation, such as car insurance, car repairs, transportation, hospital services, and homeowners' prices. Despite excluding volatile energy and food prices, core CPI growth remains high at 3.8%, nearly double the target rate. The administration's narrative of decreasing inflation is increasingly questioned, with media headlines highlighting a persistent high inflation as a political challenge for Biden. Biden's attempts to defend his handling of inflation are met with skepticism, given his previous denial of significant inflation and his administration's continuation of inflationary monetary policies. Yeah, I mean, that's a good point. Out of one side of their mouth, they're saying, everything's great. Now, the other side, they're saying, well, this could be if inflation could be a problem getting Biden reelected. Well, I mean, which is it? And, he's been in charge now for 3 years. Yes, Trump signed a lot of that stimulus into law back 4 years ago with this, the summer of 2020. But, Biden could have undone all those things, if he thought that it was, certainly going to do more harm than good. I mean, and he just piled on with more stimulus on top of that. And seriously, if these people were serious, they would stop the spending now. You would stop, you'd start laying people off. You'd stop the spending. You'd start paying down the debt and getting things back under control. But, no one seems to want to talk about that. All right. Where were we? The blame on the private sector, private sector greed, which is where they like to point the blame, or external factors like shipping delays, is refuted, with true cause of inflation attributed to monetary policies and deficit spending. Despite mounting evidence of the government's role in fueling inflation, the regime remains unapologetic, continuing to deflect blame and downplay its impact on ordinary Americans. Gaslighting tactics are expected to persist as the administration avoids accountability for the inflation crisis. And again, it's both red, blue, they're all guilty of it. I'm not just, dumping on the Dems right now. So it just is the way it is. So, all right. Well, that is everything I had for today. If anyone needs anything from me, hang on. Go to dsafinancialgroup.com. All my contact information's there. I hope you guys have a wonderful evening, and I shall talk to you next time. Adios.